Give us a breakdown of what you think the numbers look like.
Well, first is they're profitable, and that's one of the big things everybody's looking for. Second is they opened the Shanghai, China factory, which opens to them the world's largest car market and also the largest electric car market, because China has mandated they want to be 100% electric by 2030, which is not that far off. And they still increased production, and even though they missed their goal of, I think, 100,000 cars, they still came pretty close, in my view. That was a great quarter for them.
Is it a concern that revenue, though, is slowing? Does that say something about where Tesla's growth can come from in the future?
Well, I don't think it's slowing as much as the mix is now shifting more toward the 3, which is a lower priced car than the S. And the next big thing for them will be the Y.
Ivan, I want to throw up this chart taking a look at gross margin, because that's really why we've seen the stock pop and reach like $306, I think, the last time that I checked in the session today. In terms of the gross margin, though, as much as it's looking better now, can this be maintained? Because it seems like largely we saw that quarter impress on the back of some pretty serious cuts, right? We've had 3 rounds of job cuts since late last year. We've had, some restructuring of internal departments as well. Is that a sustainable way to drive future growth?
Well, I think most importantly, you want to see unit growth, and then you want to see revenue growth, and of course you want to see profitability. But to me, really what matters is net profit, not so much the gross profit. And I think over time, probably the gross margin may contract slightly, again, as the mix toward lower priced cars, including the 3 and then eventually the Y, starts to lean more to those cars. The margin may come down, but they continue to experience very strong demand for their cars. They do market well, and they have proven again and again to a lot of skeptics that it's a great car and there's a strong demand and a big market for it.
Yeah, I thought the sort of, some of the concerns, or one of the sort of perennial concerns, was the production bottleneck and what's happening with the pipeline around. That was really addressed in an upbeat way in the investor letter and in the release today. They're ahead of schedule for the Model 3 factory in Shanghai. They're also ahead of schedule when it comes to Model Y production, expecting to launch by summer 2021. Do you think we should be cautious here? Have they resolved their production issues? Do you expect them to be able to hit the production targets for Shanghai, for example, by the end of the year?
Well, I think the key is demand. I mean, I'd rather have a production bottleneck with a strong demand than the reverse. So they continue to improve their capabilities. The new factory in China is a major game changer. And they still have a lot of capacity in their Fremont factory to continue to ramp production, because the factory that they occupy at one time produced over 1 million cars a year when it was a General Motors factory.
Especially when it comes to that factory in China, they kept emphasizing how cheap it is to make those Model 3s in China. In that sense, though, should we be a little bit more concerned about the pressure on margins as they gravitate towards the lower price models?
I'm not that concerned about margins. I know overall a lot of people on Wall Street look at gross margin. I don't think gross margin is as important as the net margin. But and that I think will come as they continue to increase the operating efficiency of the company and also amortize their operating costs over more and more cars.